Okay, what's up, guys? So let's go over the markets going into this week. Um, this is going to be the weekly watch list for this week. We don't have the market open tomorrow, Monday, for President's Day, but we do have the market back open on Tuesday. Fed minutes on Wednesday from January's meeting, initial jobless claims, and then a lot of Fed speakers sprinkled in throughout. And so it should be interesting this week. On top of that, we have our mentorship starting on Tuesday night. First class is going to be at 7 p.m. And so if you are interested in joining that, well, you've got about 2 more days to sign up. And it's $47 for the whole thing. And we are going to be running through 2 months worth of content. Um, so weekly class every week, 2 months. So really it's about $5 a class, and it's super cheap. And yep. So that's coming up. We'll be going over the squeeze indicators. I'll give you some of the indicators that I use, um, teach you about those, trend trading, market structure, understanding sectors, all of that, understanding market internals like the ticks, the VIX, the put call ratio, all that good stuff. So if you're interested, I'll put the link in the description of this video, but also it's all over the Discord as well. Um, okay, so enough of that stuff. Let's get into the markets. So first things first, number one thing that has caught my eye. So that would be the NASDAQ is now in a squeeze. Okay. So daily time frame squeeze. You can see what happened on the last one. This daily squeeze, we had a nice push upside. On top of that, here was our daily squeeze before that, triggered to the upside for a nice move. And then before that, we had a downside move. So these don't come all that often, but with that in mind, this is probably going to project another nice move like this one or this one, right? So we got to pay attention to these. These are the times when we can start to get a little more aggressive. So I would say peak aggressiveness would be on these weekly squeezes, which we had, and that's why we've had this huge run up so far. And then we kind of the daily time frame we settle for continued. We can start to get a little more aggressive. Especially when it's in the indexes. Okay, so we have a daily squeeze in the NASDAQ. We have a daily squeeze on DIA. Now, why is this important? Well, we don't have a squeeze in SPY. Now, what's interesting with this is it comes to the fact that if you know how these indexes are made up of or what they're made up of, then it will better suit you and you're trading and understanding what is happening. It's basically like how a car works, right? You've got certain things that do certain parts within a car. Um, for the markets, for the indexes, you have certain sectors that do certain things or that will either help the car or hinder it. So, like, let's say, what's a good example? Simple example. Okay. You have everything working in your car. Everything is perfectly fine with your car. You're ready to go on a road trip, but then all your tires are flat. Are you going to get very far? No, you're not, because you're missing an essential part of the car to get you where you want to go, right? So if we want to see upside in the markets, we have to see a majority, if not all, of the cylinders working behind the scenes. Okay, and I do have a sector analysis video that you can go and watch that. That's in the education tab. It's free to watch, but we can kind of dive into some of those pieces right now. So first things first, SPY. This is made up of number one weighted technology, and then from there is financials and healthcare are kind of evenly split. Those are the things that really drive the market for the most part for the S&P 500. QQQ, we have technology. So overall tech stocks make up 49% of the QQQ. So We had a pullback on Friday. We had a crazy day on Friday. It was very volatile. OPEX and tech stocks did not perform well, which kind of dragged down the rest of the market. And then really it goes to communication sector and semiconductors, which is technically tech, part of that 49% for the most part. And then we have one other sector that's in there, consumer discretionary, which is XLY. Okay. And then from there, we have the DIA. This one's the most evenly distributed based on weightings. It's about 20%, 20%, 20%, which make up 60% of the whole index. And this would be divided up between technology, healthcare, and financials, right? Okay. So typically what's going to happen is the one of these two will dictate the movement of SPY. Okay. And that's typically what will happen. And what's interesting is that these two have squeezes, which will more than likely dictate what SPY ends up doing, unless they continue to chop and SPY goes into a squeeze, and then we have all three are in a squeeze, and then it doesn't really matter too much. But so what we're looking at here is now we can go look at those different sectors. So the main ones that we need to pay attention to are XLV, which is healthcare, and then XLF, which is banks, right? Or financials, really. Okay, so when we look at this, see XLF, start with XLK. XLK is in a daily squeeze, and you can see this is very similar to QQQ because it makes up 49% of the NASDAQ. So right now, what we're looking at is we have not messed up structure. We're still in an uptrend. You go and look at here. We've got a higher low that's placed right there. That's our higher low. And let me change that. Okay, so this is our higher low in XLK. Now, it looks like we may be making a lower high, right? So we have this, we put in this high, we gap down, and then now we might be putting in a lower high. Now, I can't technically be bearish on the daily time frame on tech stocks until we break below there and have a close below this level right here, because that's the higher low, which is also pretty close to that 21 EMA. So right now, tech stocks, yeah, we might be putting in a lower high. We looked pretty weak on Friday. But typically we do see a little bit of selling into OPEX, which happens often, right? We usually see selling toward the end of the third week of the month, which is the monthly expiration, OPEX, and then typically we have market participants starting to open their new positions that are options traders. They start to open their new positions for the next month, so on and so forth. So right now we can't be bearish on tech. And there's not too much to look at this one here besides this right here is maybe a little bit of a warning sign, but we're not going to do anything with it until we have a break below here. Okay. And then from there, we look at XLF, which is the second most important, right? You can see here we have a daily squeeze. We've got a 4-hour squeeze as well that has fired off. So this may trigger the daily. And you can kind of see an example here of why those higher lows make so much of a difference, right? So we have a higher low here that made a new high. We tried to break below once. We came down, tried to break below again, got right back up, and then had a push up, and we broke out above this high. Now this is our new higher low. Okay. Or here, whatever you want to do, whatever is more conservative for you. But we have a breakout. We had a 4-hour squeeze. We traded this one last week. We're up about a 90% on the position right now. And I'm thinking we can get a pretty quick move into 40 as long as the markets don't fall apart, which is what we're kind of going over now. Got a nice weekly candle that made a new high. And then all-time highs is not far away. We're about $2 away. So we're 5% away, roughly, if my math off the top of my head is correct. So that's that. Okay. So financials look great. We go look at names like JPM, had a nice breakout to the upside, is at all-time highs. How's GS doing? I don't remember how that ended up. Nope, this ended up doing nothing. But that's one of the lower holdings. If we want to go look at the main holdings, we can do that. Let me find it real quick. Bear with me. Okay, XLF right here. Okay, so Berkshire, clear outperformer in the sector. Huge run up, right? Huge run up. Okay, so nice breakout with continuation. JPM is the second largest holding. Okay, nice inside day after a big breakout. And we've got a nice little wick to the downside. So really what we want to see is a inside day breakout of this above the high of this breakout candle, right? Here, Visa, a little bit of a pullback. Same thing, inside day candle. MasterCard, we're still chugging along, but we had some selling pressure into Friday. Okay. Kind of with the rest of the market. So you can see here, these top holdings are holding up a bit better. And these ones kind of trade pretty similar, Visa and MasterCard. But so that's kind of that, right? But if we're just looking at the XLF as a whole, chart looks great. We had a breakout. We had been talking about this for a couple weeks now. As you can see, we had this nice little symmetrical triangle pattern going on here, right? And then we broke out of it, and now we're moving upside. Cool. Okay. So that's that, right? That's number one. So we have XLK looking a little weak, right? We talked about that, but there's nothing that we can do with it right now. Okay. We can't short it because there's no short triggers. Just we're maybe putting in a lower high. Now, XLF, big breakout, inside day. Usually will mean a continuation. You can see here, there's nothing really to think that we won't continue higher. Okay, now we go look at XLV. Now this one has shown some really crazy strength. And I think this one on the next 30-minute squeeze, we could just get long on this one and trade it to the upside. Because if you look here, we're at new all-time highs. We're breaking out of this monthly bull flag, which could be a very huge breakout. And I think we're going to go see 50, 150 here very soon. And so unless this is a complete failed breakout by XLV, we've got a lot of, like I said, 2 out of 3 cylinders working for us, right? There's nothing more to be said about this one besides, look, we had a range. We rejected here. We rejected here. And we rejected here. Okay. And then from there, we broke out above this high. We made a new high. We had a breakout pullback and then a continuation. We retested this level and now we're making a continuation. Cool. Now, what we can look for is this monthly squeeze. There's potential to fire off, go hit 150, and then we're kind of up in no man's land, I guess you would call it. I don't know what that is. And then, so, I mean, fib retracements is the only thing we can run with, right? So 150, yeah, would be that first target. And then from there, 158, 160 area. Okay. So I like this one. On the next 30-minute squeeze, we could just go long in this one. And then on top of that, you've just got these sectors. And then obviously you can see the strength here. Everything else is red besides XLP and XLB. And there's the strength, right? So cool. It looks good. So the 2 out of 3 cylinders are working for us. Okay. So now what does that make me lean towards? Probably the Dow. And we do have a position in this. We'll see if it works out. It might not. If tech decides to fall apart, it may not work out. But right now we've got a 4-hour squeeze. We're holding above the 21. And this could be a lower high, but at the same time, we could see this continuation. Now, either way, if we're wrong, cool, whatever. We've had great trades and other stuff earlier this week in XLF and XLB, IWM and XRT. So now, like, what I'm thinking in terms of now that we've talked about all these individual sectors, the one that is most heavily weighted in these other things is so the S&P and the Nasdaq. Both are more heavily weighted in tech stocks. The Dow is not. Okay, the Dow has pretty even distribution between XLF and XLV and then XLK. Now, if XLK can start picking it up, which has a daily squeeze, so it has the potential to go higher, right? It's maintaining its uptrend. There's more we can do, or there's no reason to think it won't go up just yet. Okay, we talked about the warning signs, but there's nothing to tell us different, right? XLF and XLV look great, right? So I'm thinking that if XLK can start to pick up, then we could see a nice move in the Dow, fire off this daily squeeze, and from there, notice inside day on Friday. From there, I think once we blow past this 390 area, if we can get through this 390 area, we're probably going to go see 400, which I think more relevantly speaking in the YM would be 40K in YM and 40K in the DJI. Okay. So that's what we're looking for. Right. So I'm thinking that's very possible. Now, another thing to note is that the strength in banks is also starting to pick up things like IWM. So one of the main holdings in IWM is KRE. Okay, KRE has it doesn't look great, right? But like if we look at the weekly time frame, you can see we might be trying to stage a reversal, right? We've got the stacked EMAs. It's like a little bit of a break and retest of this. We've broke structure to the upside. So maybe we are going to push upside. We're at the bottom of this range. Maybe we're going to bounce and continue higher. Okay. And then, so that's kind of supporting the IWM. Now, the IWM looks like it is trying to break out of this range that we have put in as of recent, that we've been in for a very long time. So since June 2022. Okay. So we look at this, you can see this is the range that we put in, right? We've been trading in this range. We look like we're trying to break out. We've got the symmetrical triangle that we had been forming over a few weeks. And now we could potentially be breaking out of this. We had a breakout. We caught this move up. We pulled back, retested, and now we're trying to continue upside. So I'm interested to see, okay, if this continues now. But even more so, I like this for my XLF position that we're currently in. So KRE, I'm thinking, okay, this one can continue up. If this can get a reversal, we've got a little bit of a double bottom going on here. If we can get fixed structure, fix the EMAs, we could be off and running on the IWM. So KRE is regional banks, and then XLF is just the financials as a whole. Okay. So I think that if KRE can start to move up, that's only going to help XLF. So yeah. Then once that gets going, I think the Dow and IWM can start to be outperformers in the market. So kind of want to keep our focus on IWM and DIA until XLK starts to clean itself up. And then we can look to go long the NASDAQ, which we are not a far shot away from 450. Okay. So I think that we focus on these other sectors of the market until tech starts to clean themselves up. Okay. So I like that. And then we kind of just give tech a breather as it needs. And then once tech starts to pick up, we can start to look at things like Microsoft, daily squeeze. There's an inside day. Now you can see that. But here's our higher low. As long as we can hold that, I think we should be good to go. But if we break down, cool. Then we don't want to trade it. So then if we look at some other sectors that I do like, can just kind of take a look at some. So first thing, bonds look like they may be breaking down and moving downside. So we got to keep an eye on that. And then from there, Bitcoin stocks, nothing to do with right there. We've got a daily squeeze in cyber, so that's something to pay attention to. Things like crowd, AVGO, those could start to move. Like AVGO is in a squeeze as well, so we can pay attention to that one. Maybe we just chop into earnings. We'll have to see if there's any potential in that. And then as for other sectors that I want to pay attention to, XLE, pretty interesting, but I'm more so interested in USO. Reason being is because this more closely tracks the oil, and oil looks like it's ready to break out. Okay, so and we've been talking about this one, and I'd let you guys know in the chat. I have personally have not started a position in this just because I think there's other things that look better, but I think I should. So I'll probably look to do that this week if we can get a pullback, something within the buy zone, or maybe I'll just buy USO some calls for next month and just size lighter. So then I can just size for 0 and let that thing run. And maybe we go test this trend line up here at maybe $80. I mean, by the time it gets there, it'll probably be around 79.50. So that's number one thing. I think this sector could have a breakout really because of the CL chart. You can see daily squeeze. Everything's perfect. The only thing is the weekly chart doesn't look that great. So that's kind of why I've been hesitant. But the monthly chart looks pretty good. Now, monthly chart also looks good on XLE. So maybe we'll just want to play the strength, and maybe this won't follow directly like CL, follow it directly, but this chart, monthly chart looks better than CL. I think that there's pretty good potential. We could see this thing go and head to back to $100. Okay. And then potentially make a new high because that's right near $100. So those are the things that I'm paying attention to. Those are the sectors of the market that I'm really watching. But lastly, some tickers that you guys can definitely pay attention to is some names that have been continuing to show some strength, right? And I'll bring those up to you. So LRCX, this one has had some great strength. It's got a 30-minute, or well, I would look for the next 30-minute squeeze, something like this, and look to trade it to the upside. You can do that through shares. The contract's a little illiquid, but you could definitely trade this one to the upside. Now, I would say SMCI, pay attention to on the next 30-minute squeeze, but it's starting to fall apart in comparison to how it looked before. So you can see here, these are kind of the momentum trades we're looking for. So you can see, look, 30-minute squeeze, we got a gap up, 30-minute squeeze, nice move up, 30-minute squeeze, nice move up, 30-minute squeeze, nice move up, 30-minute squeeze. So this is how you kind of play those momentum trades, right? So the ones that I'm paying attention to personally are, I'm looking at kind of these big tech names, right? So Costco, well, Costco is not tech, but this one has had some great strength and has continued to show strength. And if you just look at this chart, we've been just trending upside very nicely. So I am looking at going long Costco and looking for it to take out this previous high, maybe head to 730, and then from there we could head to our all-time high. So we got to look at this here. So that 733 area, so about a $10 move. So I do like this one for upside. So I'm going to be paying attention to this one, Costco, and then another one, Crowd. This has earnings coming up relatively soon. But this one has had some great strength if you look at the daily time frame. It's just continued to trade in a strong trend, and basically just looking for that to continue. So definitely keep an eye on Crowd. I think this one could have a nice move upside as well. And then LRCX, similar story. Wait for a 30-minute squeeze, and we can look for that to continue upside. And then last one, Cat. Sorry, let's go with Alta. This one, little bit of an oddball stock, but you can see here, we broke out of this flag, created another flag, broke out, and then we're continuing to trend up. We're in a 30-minute squeeze, so let's see if we can get a continuation pop into maybe 550, see if that's possible. And then so really what I'm doing is looking for stocks and strong trends and just continuing to play those to the upside. So these are just a few names that I'm keeping an eye on. I'll look for a 30-minute squeeze like in spot, and I'll look to day trade it to the upside and follow the strength, follow the money. But okay, guys, let me know if you guys have questions. DM me, send messages in the trade floor, ask questions, and I can definitely review any charts that you want me to look over. But that's all I've got for you. Thank you guys for coming. So just a little bit of recap. Keep an eye on financials and energy, oil, things of that nature as of right now, and then wait for tech to kind of shift momentum. Otherwise, we'll be looking at names like these, looking for those lower time frame squeeze plays, and trying to catch the momentum. All right, guys, thank you for coming, or thank you for watching, and I will see you guys for the markets on Tuesday.